You answered a question, a big question that was on the tip of my tongue, just how to get our businesses in the position for funding. Because as you said at the beginning, most of us don't have rich uncles, rich aunts, we don't inherit money. So,
Right.
But we want to be, self-employed. So how do we get that funding? How do we position ourselves in the first place to get that funding?
So one of the most important things is, one, making sure your personal credit is intact. Unfortunately, because of different things that happen in our community, sometimes our credit does take a hit, and we don't necessarily do the things that are necessary to fix that. So you want to have pristine personal credit, because if you have pristine personal credit, then that'll give you options as it relates to startup funding. What most people don't know is, you may be excited, you have your business idea, you have your business plan and everything, but less than 35% of businesses, small businesses, are able to go to the bank that they've been banking with and secure a loan. So they think, oh, I'll just go to my, I've been with, I'm not going to say any names, but, I've been with this bank for, 10 years and I've put all my money in there and all these different things. And now I want to start a business. Well, it's not as easy as you think to get that startup money. And so even when people say, oh, the SBA has micro loans and some of these different things, some of the parameters that are set to be able to secure that is very challenging, especially if you don't have your personal credit in order. And so I've got a lot of programs, especially a startup program that is unsecured. So if you've got that good credit and you've got a good credit history with, any loans or mortgages and personal credit cards, then we can leverage that to be able to get you business cards or a personal loan to be able to get started. And then that's just the beginning, because then also you need to establish business credit for your entity so that you're in position, because a lot of people don't realize that, the SBA will give you a loan for your business after you've been profitable for 2 years. So you've got to show 2 years of tax returns. Well, they may not tell you that you need a minimum credit score of usually 640 to 660, but then you also need to have established some business credit. So some people have done well, they've established their business, they've gotten good personal credit, they don't have any business credit. And so because of that, they're not able to secure that larger loan that they need through the SBA. And what I've seen a lot of, go ahead.
No, I was going to, sorry to interrupt you, but because this is
no problem.
Yeah, because this is an international program show, I just wanted to explain to people, or ask you to explain to people, what do you mean by the SBA?
Oh, okay. I'm so sorry. So that is the Small Business Administration. So that's an entity here in the U.S. that usually can work with banks, and they can actually secure loans and help back the loans for small businesses, because banks may see the business as a risk, especially if there's no collateral, if there's no real estate involved, like you're leasing a space and you don't own the space. And so the SBA will back the loans, and that really just limits the exposure to the bank when they want to provide a small business loan to a business owner. The challenge is, though, if you don't know that you needed to have established business credit and you haven't, then you're kind of stuck and you're not able to secure that loan. And so what I've seen a lot of times happen is one may start, they've gotten some money, or they may be bootstrapped and raise their own money to be able to get started. But then when they need that next infusion of capital, not having been in position, they end up having to get the worst type of loan there is for a business, which is what we call a merchant cash advance. This is where they look at the revenue that you make for your business. They look at how much you're bringing in on a monthly basis, and then they will advance you up to 125, 150% of whatever your revenue is. The challenge is you get the lump sum, but the way that they take their payments is either daily, so Monday through Friday, they're pulling money out of your account, or weekly. So if you're trying to establish cash flow for your business and you've got to pay payroll, you've got to get inventory, you got all these different expenses that are coming up, how are you supposed to manage that and effectively establish your cash flow when they're constantly pulling money out of your account? So I've seen folks get into these situations where that's the only type of loan that they can get, because at least they are bringing in revenue, but they get one MCA, and then because they fall behind, they get another one. And it gets to the point where you either sink or swim. And I've seen a lot of businesses end up sinking just based on that situation.
If you just enjoyed that video, check out the longer version right here.